Hello everyone, welcome back to the channel. If you have been watching the channel or keeping up with the stock market, you know we had a major dip around 4 weeks ago. And now the stock market has recovered. During the dip, we bought a lot of stocks. We invested, we put our emotions aside, and when everybody was scared and panicking, we were buying companies at a discount, which pretty much like Christmas. All these great companies were at a crazy discount, and I was buying like it was Christmas. Now the market has recovered. The S&P in the past month is up 15%, and I'm watching a lot of the gains. To kind of highlight these gains, let's look at some companies to kind of see what we're dealing with. So NVDA, a $3 trillion market cap, very, very massive company, was up almost 39% in the past month. 39% for a $3 trillion market cap. Meta, massive company, was up 31%. Meta. Let's talk about a smaller company. Robinhood was up almost 63%. Amazing. And if we're going to talk about Robinhood, we are going to talk about SOFI. In 1 month, they were up 24%. Not bad at all. And we have some laggers like Google, still up 10%, and Amazon up at 21%. So now let's talk about it, and I'll give you a little bit more of hints at the end, and kind of some valuable advice. So the market is up. What am I doing? Right now, I am not selling my stocks. I'm going for the ride because these stocks I'm buying for 5 to 10 years. I'm not buying for tomorrow. I'm buying for a while. I want them compounding. So I'm letting these companies ride because I bought very well when they were cheap, watching my gains, but slowly buying into my laggers, and that is Google. I still think they're very, very undervalued. They just released a whole conference going on for developers. They're releasing glasses. They're doing a lot of initiatives with AI and Gemini. So Google, amazing powerhouse, and I like their cloud network. And also, I am slowly buying Amazon. I'm not buying as aggressively as I did before, 4 weeks ago, because I bought a lot. Now I'm just buying slowly, a few $100s here and there. So still putting those in my Roth IRAs and just forgetting about them. And in the meantime, I am saving cash because the market is very cyclical. It goes up and it goes down. And when we get another Christmas, I want to be able to buy a lot again. So you need capital to invest. But it's also very important to stay invested because, for instance, let's say I have $10,000. I give that $10,000 to Google. They have some of the smartest minds working at Google, and their goal is to innovate and make that money grow. So they're going to work on AI, cloud business, YouTube, self-driving, robotics, all these amazing stuff that will bring a lot of growth to my $10,000 investment. But let's say I had that $10,000 in the bank, it's not going to accrue much interest unless you're in high yield savings account, and even then, maybe 4% a year. And most likely, I'm probably going to buy a vacation, spend on a few dinners, maybe fancy dinners, and my $10,000 went to zero. So that's why it's always important to stay invested because if you put onto these companies, borderline monopolies, massive companies will not be disrupted, and all they're going to do is grow your money. So, one important thing I want to talk about is take care of what it's important when the market is up. Right now, I have pretty much my only loan or debt is my car. So, I'm going to focus heavily on paying off my car and building up a cash pile. And I want to talk to you about something also that's very, very important. I get asked that question a lot. Let's say you invest $1 and somehow that company does well, that dollar doubles, now you have $2. 100% gain. But the only issue is you only invested $1. So your profit is $1 because now you have $2. So let's say that same company, you invested $50,000. It does great, it doubles, you get that 100% return, but now that $50,000 just became $100,000. And now you're sitting at $50,000 profit instead of that $1. So it's important to take the stock market seriously. These are companies that you want to own. These are investments that you want to invest in. You want your money to work for you. You want to use your money as a tool. So you want to take that seriously and invest real capital. You can't think that investing $100 will make you an overnight millionaire. Your odds are getting hit by lightning 20 times is probably better than that happening, unless you find that one amazing company. And if you do, let me know. But take investing seriously, and it's probably really risky too. So if you're investing $100 and becomes a million, most likely it's going to go to zero. So remember that, buy good companies. Remember, things take time, and the power of volume. If you have a lot of capital, 10% gain is a big gain. But if you have very little capital, even 200% gain, it's not that big. That's only $1 to $1.50. So think about it, invest your money, take this seriously, and I hope this helps you. See you on the next one.